What's going on, guys, and welcome back to another video. So in today's video we're going to talk all things Apple, as there has been quite a lot of news for this company over the past few weeks and even months, and there's also a lot of news coming out for the future of this stock also. So in today's video we're going to go through the following topics. We're going to give a summary of Apple overall and the product offerings. We're going to take a look at Yahoo Finance and go through a few tabs on that and look at their charts and financials and even fundamentals. We will take a look back at the Apple stock split and how this has affected the stock and the company as a whole. We will also talk about the Apple news from yesterday in regards to their new product offerings. We will take a brief look at the new Apple i+ Fitness that is coming down the pipeline. And we'll take a brief look at other Apple news also. So we can see that Apple is traded on the NASDAQ and has ticker AAPL. Apple Incorporated is an American multinational tech company headquartered in California that designs, develops, and sells consumer electronics, computer software, and other online services. It is considered one of the big tech companies alongside Amazon, Google, Microsoft, and Facebook. In terms of a brief overview of the Apple products, there is kind of a few that really stand out in comparison to the others. So when you go onto the Apple website, you can see that the Mac is certainly one of their main products, the iPad, the Apple Watch, iPhone, Apple TV, and that's kind of their standard core set of products, but we'll go into a lot more of the less so well-known products later on in this video. So we can see that the current NAV for the Apple share is $115.54. We can also see that the volume is 184 billion shares in circulation. Their market cap is 1.976 trillion, which is ridiculously high. Their PE ratio is 35.05. Their earnings per share is 330. Their earnings date will be between October 28 and November 2nd this year. Their forward dividend is 0.71%, or in dollars it's 0.82 of a dollar. The ex-date is the 6th of August 2020, so it's already passed, and the 1-year estimate is $117.14. In terms of Apple's 1-year chart, you can see, and it is also worth noting, that because of the stock split of 4-to-1, these prices before the stock split have been divided by 4. So you can see here that, just for example, if it was multiplied by 4, it would be about $216 to $220 at the time. But for the purpose of this video, we will keep it as is now, so divide it by 4. So at the start of this 1-year chart, we can see Apple was $54.43, and it has impressively kind of came on an upward trajectory. So you can kind of see up here, you can kind of see that it's going up. So it went up to the 70s. It dropped like literally 99.9% of the companies during the crisis. And since March, it has continued to go on an upward trajectory yet again, and is now, it's going currently at $115, which is very promising to see any company come back from the crash. And because Apple is a growth stock, its kind of ascendancies and declines will be a lot more kind of volatile than, let's say, your more safer options like Coca-Cola, which would have more of a kind of steady, very little increase and decline over the year. And we can even see then on the 5-year chart that it's really going up in value. It's very impressive, this company's growth, and it's also worth noting that this company's potential is staggering. Like the sky is the limit for these kind of tech giants. Now taking a kind of more in-depth look at the company's stats, so you can see the market cap intraday currently is 1.94 trillion. Their enterprise value is 1.96 trillion. The trailing PE ratio is 34.42. The forward PE is 28.41. We can see further down here in terms of their balance sheets that their total cash is 93.03 billion, which is a ridiculous amount of money to hold. The total cash per share is 5.44. They have debt of 122 billion. Their total debt to equity ratio is 169.04. The current ratio market is 1.47. In terms of their cash flow, their operating cash flow is 80.01 billion, and their levered free cash flow is 52.26 billion. In terms of Apple's brief profile, they're in the technology sector, in the communication electronics industry, and at time of recording, they employ 137,000 full-time employees. Anytime when I look into a company for an potential investment, I always look at the shareholders, as I find that they control the runnings of a company a lot more than people actually think. So in terms of their major holder breakdown, 0.07% of the company is held by all insiders, 62.12% of the shares is held by institutions, 62.16% of the float is held by institutions, and the number of institutions holding shares is 4,296. In terms of their top institutional holders, the top three is Vanguard Group, which holds 7.69% holding. BlackRock is in second position with 6.44%, and Berkshire Hathaway is in third place with 5.73% holdings. In terms of the top mutual fund holders, Vanguard Total Stock Market Index has 2.6%, Vanguard 500 Index Fund has 1.98%, and the SPDR S&P 500 ETF Trust has just over 1%. I believe the 4-to-1 stock split for Apple was very worthwhile, and it was perfectly timed, I believe, as well, as the markets were crazily going in an upward trajectory. And just like Tesla's 5-to-1 stock split, it has made the average investor be able to buy these companies at a lot lower price. So as you can see here from CNBC, the history of Apple stock splits, say investors should be rushing in to buy lower price shares. Now that is certainly true. So we can see that it gives the average investor a lot more scope in terms of buying shares. And even, for example, if you already owned 4 shares or even 10 shares in this company, and it was the 4-to-1 stock split, then you'd have 40 shares and you woke up the next morning. Obviously, it doesn't really affect the overall intrinsic value of the company, but certainly when the stock price is lower, a lot more people will be buying in, because even the psychological factor behind it as well. But in terms of more people being accessible to buy into these companies, it will certainly increase the demand also. So you can see here that there has been 4 prior stock splits in Apple. The first of these being in June 1987 for a 2-to-1 split. There was one in 2000 for a 2-to-1 split, in 2005 2-to-1, and in June 9th, 2014 there was a 7-for-1 stock split. So another aspect of Apple that really impressed me, and obviously it probably impresses the majority of the world, is their diversified product offering and a futuristic style approach to products to increasingly innovate and improve people's quality of life. So we can see that last night there was a new product launch, and Apple, we can see from Sky News that Apple released a new watch and iPad, but there was no sign of the iPhone 12. So there was 3 new Apple Watches that were shown off, and the updated version of the Watch OS. The marquee new feature was the pulse oximeter, which allows the wearable detected blood oxygen levels by using red and infrared light to measure the color of wearer's blood, which is certainly very cool. In terms of the Apple Watch 6, it'll be available from £379 from the 18th of September, and the GPS cellular capabilities will cost $479. As part of the company's move to generate revenue from services as well as the hardware devices, it has announced a new Fitness Plus service, which I mentioned at the beginning of today's video, which allowing Apple Watch users to take part in program workouts with the world-leading fitness experts with performance measured by the Apple Watch. We can see from the techradar.com that Apple Fitness Plus new workout service to rival the Fitbit and Peloton. Now this could be a huge option for Apple to increase their service offerings as well, and you'd feel that, and because they're such a gigantic company, that they would be able to rival Fitbit and Peloton. We can also see here that Apple has lifted the lid of its long-rumored health and service workout. Apple's Fitness Plus is a collection of workouts that you can tune into your iPhone, iPad or Apple TV, and it works alongside your Apple Watch, so it can track all your fitness data on screen as you go. So with all of that being said, in summary, I feel that Apple is a brilliant company to invest in if you're into growth stocks, tech, innovation, and long-term investing, as I feel that the sky is the limit for this company, and there's very little companies out there that have such potential to innovate and increase and improve the way we live our lives in the coming years. I also feel that because of the stock split, as the price is reduced dramatically in terms of the 4-to-1 stock split, it gives the average investor a lot more scope to buy into a company with the massive potential that Apple has. Like, even just for example, their fitness product that they have launched, that's another huge step for the company in terms of taking over in that sector. So the final kind of synopsis is that yes, I'll be completely buying more Apple stock, even if the price goes up or goes down, well and good. So the dollar cost average. But I'll definitely be buying more Apple, as I feel that the sky is the limit, and I think you should too. But obviously do your own due diligence and your own research before buying any companies, as I am not a financial advisor. So that being said, thanks very much guys for today's video. If you liked the video or found it helpful or interesting, please smash that like button, and if you haven't subscribed already, I'd be very appreciative if you would consider doing so. And finally, if you have any comments in relation to what companies you would like me to analyze next, just comment below. And also, if you feel that Apple is a company to invest in, or do you feel that the company is overvalued, and do you think their new fitness feature will be a success or a failure? Thanks very much guys, and I will see you in the next video.